Welcome to the Mortgage Foundations podcast, where we are here to guide you through the ins and outs of the mortgage world. Get ready to unravel the complexities and gain a solid understanding of everything you need to know about mortgages. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with expert insights and tips. Let's dive into the fascinating world of mortgages together. In today's episode, Tyler Cowell, the principal broker of Mortgage Foundations, FSRA number 13614, will discuss alternative mortgage lenders and how they are important to the industry and may be a suitable option when the traditional prime lenders are not.
So, you're curious about alternative mortgage lenders, huh? Well, you've come to the right place. Let's dive right into it and explore what exactly an alternative mortgage lender is. When we think about getting a mortgage, the first thing that usually comes to mind is heading straight to a traditional bank or credit union. After all, they are the most commonly known and trusted sources for most loans, including mortgages. However, there is a whole world of alternative mortgage lenders out there that you may not be aware of. It is important to note, first and foremost, that a common misconception is that needing to source funding from an alternative lender is indicative of something negative, such as bruised credit. However, that could not be farther from the truth. In fact, many of the strongest clients are with an alternative lender simply because the traditional banks or prime lenders are unable to work with their income or investment situation. A perfect example of this is a self-employed individual that chooses to pay themselves a low income and take advantage of the tax write-offs available to them, or a real estate investor that increases the size of their property portfolio and no longer qualifies based on a prime lender's lending guidelines. Also important to note that many of the prime lenders also have an alternative lending side in order to maximize the solutions they have available for all clients. To put it simply, an alternative mortgage lender is any entity or institution that provides mortgage loans outside of the conventional banking system. These lenders often cater to borrowers who may not meet the strict criteria set forth by traditional lenders. They offer unconventional mortgage options that can be a great fit for those who may have unique financial situations or obstacles. One of the key characteristics of alternative mortgage lenders is that they typically have more flexible underwriting standards compared to traditional lenders. This means that they are more willing to work with borrowers who have less than stellar credit scores, limited income documentation, or non-traditional sources of income. So, if you've been turned down by a traditional lender due to a low credit score or lack of steady income, an alternative mortgage lender may be the answer you've been looking for. These lenders often specialize in niche markets and cater to specific borrower profiles. For example, some alternative mortgage lenders focus on lending to self-employed individuals who may have difficulty proving their income through traditional means. Others may specialize in providing loans to real estate investors or borrowers with unique property types, such as vacation rentals or mixed-use properties. Now you might be wondering, how do these alternative mortgage lenders work? Well, they typically raise funds from various sources, such as private investors or institutional investors, rather than relying on deposits like traditional banks. This allows them to have more flexibility in their lending practices and offer a wider range of loan options. So, why would someone choose to work with an alternative mortgage lender instead of a traditional bank? Well, there are a few reasons that make alternative lenders an attractive option for certain borrowers. Firstly, as mentioned earlier, alternative lenders have more flexible underwriting standards. This means that they can often work with borrowers who may not qualify for a loan from a traditional lender. So if you've been turned away by a bank due to a low credit score, high debt-to-income ratio, or lack of income documentation, an alternative lender may be more willing to work with you and find a solution that fits your unique circumstances. Secondly, alternative lenders can often provide faster loan approvals and funding compared to traditional lenders. This can be particularly advantageous for individuals or investors who need to act quickly in a competitive real estate market. Additionally, alternative mortgage lenders may offer unique loan programs and features that are not available through traditional lenders. For example, they may offer interest-only payment options, flexible repayment terms, or creative financing solutions tailored to specific borrower needs. So, if you have a specific financing requirement or a non-traditional property type, an alternative mortgage lender may have the perfect solution for you. Of course, it's important to note that working with an alternative mortgage lender does come with some considerations. These lenders may charge slightly higher interest rates and have lender fees that a traditional lender doesn't. This is because they are taking on higher risk borrowers or providing loans with less documentation. So, it's crucial to carefully analyze the costs and terms of the loan before making a decision. All costs of the mortgage, including future costs associated with the mortgage, should be considered and calculated with the assistance of a mortgage broker in order to protect yourself and ensure that the product is a suitable solution for you and your family. In conclusion, alternative mortgage lenders offer a valuable alternative to traditional banks and credit unions for borrowers who may not meet the strict criteria of conventional lenders. They provide flexible underwriting standards, unique loan programs, and faster loan approvals, making them an attractive option for many homebuyers or real estate investors. If you're in a unique financial situation or have been turned away by a traditional lender, it's worth exploring the options offered by alternative mortgage lenders.
In today's episode, we discussed alternative mortgage lenders and the benefits of working with them for your home financing needs. We hope you found today's episode informative, and don't forget to hit that subscribe button to stay updated for our next episode. Thank you for tuning in to Mortgage Foundations. And remember, every home starts with a foundation. Your mortgage should too.